Yeah, cool. And Cozy Nati, here he is down the bottom. Cozy is in what was formerly Swaziland, now Eswatini, which is, if you don't know, is bordered by South Africa, Mozambique, and where else? Anywhere?
The two, South Africa and Mozambique.
South Africa and Mozambique. Okay, I got this.
Yes.
Yeah. So these guys, a lot of these guys, it's kind of earlyish morning. So so Beck and Alicia kind of home loan specialists, and I asked them to come and speak to us as part of the series on leadership for a couple of reasons. One is, firstly, to kind of give you guys some demystify a little bit the process of, at least in Australia, the process of obtaining a home loan to buy your own home, and then kind of the second half of it, Beck's going to talk in general about her experience starting a small business and growing it significantly, not only in size but also what these girls have been to. I think you're all girls, right? Like from what I can see, yeah. So
opposite to your team.
The opposite to us, yeah. Much to my chagrin, I wish it was not that way. But if you meet any talented female engineers, send them our way. But yeah, so she's going to talk a little bit about that because it's not easy, as some of you guys know, starting a business and growing it. And so Beck's got this great business. So with that, I'll flip over to my questions. I'm going to ask these kind of technical questions first. So Beck, tell us a little bit about for a new Australian or for someone in Australia who isn't familiar, about the kind of a top level view of the industry, home loan industry.
Yeah, so we, as Ian mentioned, we predominantly deal with residential home loans. So that's people wanting to buy properties to live in or investment properties with the asset or the actual house in Australia. So the market here is obviously, if you don't have enough cash to buy a property, you need to get a loan, and that comes from all of the financial institutions in Australia. So what the process is we go through as a broker, we're sort of the intermediary between yourself and the lenders. Now, the lenders, in particular with us, we have over 60 different lenders that we work with. So the reason why a broker is important is because everybody's situation is different. Everybody has different scenarios and different reasons for getting finance. They also have different employment, residential requirements. So not every bank or every lender has an appetite for every type of client. So our role is really to understand, and we work solely for the client, to understand your niche circumstances, to then be able to provide recommendations based on which lenders allow you to do that. So we're kind of the gateway to help you into understanding how much you can borrow from a lender, and then what the terms and conditions with that lender are, and really holding your hand through that whole process.
It's good, yeah. And certainly my experience was I consider myself reasonably well informed on this stuff, and I found it really difficult. So it was great to have actually Lise, who did most of the work.
We should have made it easy for you. Don't say it's difficult.
Yeah. Well, I mean, yeah, maybe I took too much interest in it. Okay, cool. So my next question was, some of the guys on the call and some people listening later would be interested in Islamic finance specs. So can you talk briefly about what makes that a little bit different for a borrower who's interested in that type of product?
Yeah. So this is something that Mo and I have looked into a little bit historically. And it was a really great opportunity for me to learn a little bit about it, actually. And like I said, there's lenders out there for all different circumstances. And with Islamic finance, it's not being able to borrow money as such. You can't pay interest on a loan. So what I would say is there are lenders or financiers available that understand that requirement and the niches that or what you can and can't do. The thing with those lenders is they still look at the way that you borrow money and purchase a house exactly the same. So they still look at what do you do for work. They still look at how much cash you've got as a deposit. They still look at what financial other potential liabilities, if you had any. But they understand how to structure the the borrowing in terms of they use it as a rental agreement to make sure that it does fit with the Islamic rules.
Yeah, cool. Okay.
But it is very niche, and this is again why a broker comes into it. Is they're there to understand, because you can't just walk into your normal bank and ask, hey, I want to get this, but I can't borrow any money. Like technically I can't. So not every bank or financial institution is available.
But there are options in Australia, right, for Islamic finance?
Yeah, there are. The only thing that I would say is, yes, there definitely is. The bit that you need to be aware of is around either citizenship. So Australian citizens, obviously, that's predominantly most people that borrow money in Australia or take out finance. You can also get finance if you're a permanent resident or specific types of visas. So every lender, again, has different circumstances about which visas they accept. The other thing that probably you'd need to be earning money in Australia. Some lenders do allow it if you're an Australian citizen and you're earning and living overseas, but you'd have to be a citizen to be able to do that.
Okay, cool. And that's not something you were speaking in general terms, not just for Islamic finance, right?
Correct.
Yeah. Okay. So, but it sounds like there's a pathway if say you're a permanent resident, there's a pathway. Potential pathway there too. Okay.
Can I ask a follow-up question on that?
Sure.
Yeah.
So if you can't pay, I'm not exactly sure what you can and can't do, but it sounds like you can't pay interest. So is it like a flat structure, or like how does it? Why would anyone offer that? They're obviously making money off it. How does that work?
So from what I understand from a lot of the work that Mo and I did, is it's a rental agreement. So you are essentially paying rent to this institution. In that rental repayment, just like a normal repayment, it would have I presume it would have a fee or an interest type component built into that. So you're still paying off the debt to own the property at the end of the day, but they're not labeling it as an interest charge and an interest expense.
Right. So it's a rent to own kind of agreement.
Mm-hmm.
With fees. Yep. Right.
Yep.
Okay, cool. So before we move on, I'm skipping ahead here. So some other more specific questions. You talked about citizenship. How does a bank figure out how much they're willing to lend me?
Yep. So the main, so what we call servicing or borrowing ability, that looks at your income. So how much do you earn? So the banks have different policies around if you earn just a base salary, if you earn bonus income, if you earn overtime, commission, depending on the type of income. The bank will then say, okay, you earn X amount, less the tax that you would have to pay, is then the income that's available to service a loan. So what then they have to do after that is take away things like your general living expenses. So what do you spend month to month? They then take away things like liabilities. So if you have any other liabilities already that are commitments, so credit cards. Now, a bank will look at the total limit of your credit card. So if you had a $5,000 limit, they would then assume a certain monthly repayment, even if you don't spend that money every month, but you could go out tomorrow and spend it. So the limit is very important. Then if you have any car loans, so they would take obviously out the monthly repayment that you're making, and any other loans that you may have, student loans, or any other property loans that you have. Then so then obviously we've got a net figure that is available to make a repayment. They will then look at, okay, if you want to borrow, say, $300,000 at a particular interest rate, plus they then add a buffer on top of that to make sure that in a higher interest rate environment, you can still afford those repayments. So they are currently at the moment adding 3% to whatever the rate is that you're applying for. So at the moment, we would say that buying an owner-occupied property, so something to live in, the rate is probably sitting, most lenders, just under 5%. So they're assessing and then adding your repayments into what income you have left available at a 8% interest rate. So if then that net amount of income that you've got covers those repayments, then you get the green light from the bank saying, yes, you can borrow that amount of money.
Yeah. Okay. Okay.
The only
so-
other thing, just sorry to add to that, is that's your borrowing ability. But the bank will also want to make, if you're purchasing a property, they're never going to lend you 100% of the purchase price. They want to make sure that you are making some sort of contribution. You need to put something into this. So that's where then your deposit comes into it as well. So the lenders are looking at, yes, how much you can afford of a loan. They're looking at how much you've got as a deposit. And they're also looking at your overall position as an applicant.
Sure. And so people talk about the 20% sort of a good mental benchmark for a deposit. Is that still about right in terms of saving something up?
Ideally, yes, if you have a 20% deposit, so your purchase price, if you've got 20% of that, and you're borrowing then the delta, which is 80%, then you don't pay something called lender's mortgage insurance. You just need to be aware that the 20% also needs to cover stamp duty. And so that's a cost that the government charge every time a transaction is made. So your deposit needs to be slightly higher than 20% if you wanted to avoid that lender's mortgage insurance, which is an insurance policy for the bank that they would charge you if you had less than 20%.
Okay. And they might, with the lender's mortgage insurance, they might lend up to 90%. Is that?
They can go as high for an owner-occupied property as 95%, but that needs to include that lender's mortgage insurance.
Okay. And then the stamp duty's roughly 2 or 3%, something like that. Is that right?
Yeah, it's not a standard percentage, but yeah, it is around that.
Okay.
Yeah.
Okay, cool.
There are some, and this again, why I guess getting the help of a broker and our role is really to educate and take you step by step through the whole process and what's available to you, because it comes down to your specific circumstances. Because there are some government incentives available for first home buyers that allow things like stamp duty exemption or not paying it at all or paying a land tax. There's other incentives that are available to avoid mortgage insurance. So all of these different things would be identified during conversations about you and your particular circumstances.
Okay, cool. Yeah, and that was certainly my experience. It was very good because there's a lot of, there's like 100 different permutations of these things, right? Like, okay. I had so if we're thinking about a next step, one thing is to lobby your boss for a big pay rise. That's definitely a good next step, right? But also sounds like there's some things we can do with our own on the cost side, right? Like you mentioned, being careful about obtaining credit cards and other types of debt. Are there any other kind of key things? Let's say you were aiming to have a conversation in 6 or 12 months time. Are there things with your personal affairs you can do to sort of start optimizing it for a lender to look at?
Yeah, I would say if you're considering, or if your goal is to buy a property in Australia, then I would say there's no harm in talking to a broker as soon as you have that thought, because like I said, we're here to educate you on the process, and we're here to tell you, okay, this is your current situation. You might be surprised, you might be able to do what you want to do, or you might be very close, or you might be really far away in terms of maybe a deposit, or like you said, Ian, what do I need to change in my circumstances? That's where we as a broker can guide you through that and say, okay, actually, you've got to save another $20,000 to be possible. Or you're going to have to pay off this credit card or get rid of this student loan. They're all the things that we can start to help you with. But if you didn't speak to a broker, things that the banks are going to be looking for, often they're going to ask for 3 months bank statements, and they want to see consistency in savings over a 3-month period to demonstrate that you haven't just been given this money from anywhere, you've actually can demonstrate putting money aside. And they're also then looking at the last 3 months of living expenses. So if you're coming up and you've been on 5 different holidays, or you're spending lots on Uber Eats, for us to try and justify that to the bank that you're not going to do that moving forward is quite difficult. Whereas if it's there clear on paper that you haven't been, these are your living expenses, it's a much easier conversation.
Yeah, okay. So Logan, stop buying all those hats. Logan had a specific question. How does leveraging against equity in an ownership of an existing property work for a second loan?
So that's where you own a current property and say you owe 50%, so your loan to value ratio is 50%. So you've got another 50%. If you were to sell the property, you'd have another 50% of equity in it. Now, what people do to buy a second property is they may not have the savings as a cash deposit to contribute to the second property, so they can use the equity that is available in their existing property. What we then do is we can increase the loan on that existing property up to 80%. So you can release then that 30% equity that you have. The bank will then see that 30%. So you have to make sure you can cover that full loan repayment on that existing property. But that 30% then is used as your deposit on your second property. Does that answer your question? Yeah.
No. Okay. If you guys have any other questions, put them in the chat. So before we move on to this, I wrote down Beck's email here. If anyone wants to get in contact with her, you can have a look at that. You can pause it later and have a look at the video. Mostly I put it there so that when I put this on LinkedIn, the algorithm doesn't mark us down for having emails. But yeah, I can't. So, I mean, obviously, I've asked Beck and Leisha on here because I had such a great experience with my own family, and yeah, I can't recommend them enough. And yeah, and also, I mean, we started talking quite a long time before we bought our home, and it was very useful to start to set goals, right? So I encourage you guys and anyone listening to this later to get in touch. Okay, so Tyler, I'll come back to a question, Tyler. I haven't forgotten about it. So I'm going to ask you a couple of broad questions back about business. So, you know, a lot of people have a dream, right? And but not many people have a plan. You obviously had a dream and you put a plan to it. Tell us a little bit about what it took to take that step, how it felt, and yeah, and then I'll ask you a couple of follow-up questions.
Well, I guess I'll give you a little bit of context to my background. So I was working as an accountant in a corporate job, and I'd met somebody that was a broker, and I just thought, hey, look, that sounds awesome. So I got this real fire inside me that I thought, I think I could be really good at that. So while I still had my full-time role, I was doing all the necessary study and learning and putting the plan in place and the foundations, working out all my numbers, what was I going to need, how was I going to make this successful. And then I thankfully had an opportunity to take a pause from my corporate job for a 12-month period, unpaid, to then put my foot out there and really give it a go. So those first few months were very, very hard. And a lot of my mates would look at me and say, oh, look, you're unemployed. And I was like, oh, I'm trying to be self-employed here. And it really got me out of my comfort zone. I realized that I was in a corporate day-to-day job, going in, getting my salary, coming home, everything was sweet. But I realized I didn't have a network. I didn't know people outside of the company I worked for. So I said, well, how am I going to get business? How am I going to put myself out there? Who do I need to know? So I made a really big focus on thinking about the role that I was doing, the industry that I was in, who were going to be lead flows for me. Where was I going to get my business from? So obviously I looked at being a mortgage broker, we're dealing with real estate agents, we're dealing with conveyancers who help you buy a property, we're dealing with buyer's agent who goes and secures properties for people. And I thought, well, a lot of brokers go to real estate agents, and I put myself in the shoes and I said, well, if I went to an open home and I looked at a property, would I trust a real estate agent to tell me to talk to this finance person? Their vested interest is, I want to sell this house. How much money have you got? They don't want to share the finances. So I didn't really want to align myself with real estate agents. So I took another view and I said, well, I want to align myself with professionals that have a lot of clients that I can then support. So I went and I used LinkedIn as a way to connect with like-minded individuals in my area that were accountants and financial advisors. Now, the reason I went down that path is, like I said, I wanted to deal with other business owners. I wanted to deal with people so the accountant would do a lot of the heavy lifting for me. They'd build all the relationships. I only had to build a relationship with the accountant for the accountant then to refer the clients to me. So I wasn't doing a sales job all of the time and the heavy lifting because somebody else had done that for me. I just had to build one relationship. And the similar thing with financial advisors. They're dealing with money all of the time. The clients want to get ahead. They're normally educated people that really want the support and are going to listen to my advice. So I use LinkedIn to reach out to them. And that was hard. That was hard because you get lots of knockbacks. You get, no, I don't want a coffee with you. No, I don't want to see you. And you take it personally. But the more and more you do it, you realize it's not rejection of you, who you are as a person. It's just, no, I don't have time for you, or I've already got a relationship. It's just not necessary. So the people
Sounds like dating.
Well, very much. Very much. You got to have thick skin.
Dating's a bit more personal though.
I don't know.
So
this is life or death. This is money.
So my next question is kind of around, challenges, right? So, whenever you step out and put yourself out there, there's this kind of risk of public embarrassment, and we get afraid of different things, so that's been things that I've had to face down. What's a real war story, and more importantly, how did it change you, or what did you take from it as a way to kind of improve yourself the next time?
What's a war story? Oh, I don't know if I have a war story.
Well, you mentioned the cold context. I mean, I do that, right? Like this cold calling, right? I mean, it's just a lot of rejection, right? And that can be really hard to take.
Yeah.
You mentioned to me the other day this feeling that I relate to of imposter syndrome. The other thing is, you're this all-female team in what appears to be a fairly male-dominated industry. There must have been times when it's been tough for you.
I think I did. A lot of people sort of said to me initially, you're a female, and how do you work in a male-dominated industry? And B, you're quite young. What experience do you have? And I just kind of trying to flip it around, and you've just got to have confidence in yourself. Obviously not in an arrogant way, but just saying, you know what, I'm going to back myself. I believe in this. I know what I'm doing is the right thing. If they don't want to work with me, I don't want to work with them. There is so many people in this world that I don't want to waste my time with people that don't want to be around me, because they're not the right people for me. So I think it really, and it's taken me a long time to get to that point of having the thick skin and having that and being comfortable with who I am. I think that's been a really big journey. Yeah. And
that change, when you refer to thick skin, right? I mean, there's this idea that you have to sort of, if you're not careful, right, you can, I think a lot of the guys just right on this call can relate to this. It's very easy to get your technical work tangled up with your identity, right? Or what people's opinions of your work. And it can feel like a lot of pressure when someone, cuts your work down or something like that. Have you just sort of figured it out by osmosis, or are there any specific tips or advice you give someone who feels like their identity is really tangled up in other people's opinions of their work?
I think it has been osmosis. I think it's taken a long time, and some of the tips that I've been given is about people. You have to have self-belief. You have to have your own boundaries of what you will and won't do. And like I said before, people have to sort of meet those boundaries. Like you don't need to break that. You can't please everybody. You're never going to. So if you try to, you're only going to hurt yourself at the end of the day.
That's good.
So, and I think having a great team and having people that understand. So I found it really helpful to network with other people in my industry, that they've been so collaborative. If I can build relationships there as well, because when times are tough, you need to lean on them, because your friends don't understand, your family doesn't understand the day-to-day frustrations that you have. So if you can build relationships with people in your industry and take away competition and see collaboration, your sanity is a lot more. It's not, that wasn't you, that was the client, it's okay, or this is how I would do it differently. Somebody that gets it. That's been really important for me.
Yeah, that's good advice. Yeah, yeah. Getting alongside like-minded peers. Yeah.
Yeah.
Okay, cool. I had heaps more other things, but we're kind of running out of time. I just want to touch on Tyler's question. You mentioned that credit card limits were considered, whether or not you actually use them. Does that mean that having a single credit card with a low limit is preferable to having multiple or a high limit card?
It doesn't really matter how many you have. Like we don't want you to have too many, because every time you apply for credit, it is an inquiry on your credit file. So your credit file is a raft of credit cards, personal loans, any type of loan application, even utility bills. Make a mark on your credit file, and a lender or the credit reporting agency give you a score. So the more times you make inquiries, it's sending a message saying you're looking for credit all the time. Why? So your question around the limit, if it's over multiple or one, the limit is what they're looking for, but the number of inquiries will be try and limit them as much as possible. Yeah, hopefully that answers your question.
Yeah, that's pretty interesting. Cool. Thanks, Tyler. Okay, so I'm going to wrap it up there. We're a little bit over time. I'm going to show Beck's email address again, and I'll put Beck's phone number in the chat. I don't want to put it on this video because it'll end up. But so just as a final next step, I mean, what would you recommend, Beck? Make contacts?
Yeah, Phil, like I said, we're here to support you guys. We work completely for the client, and we're here to educate you. And that's something big that Leash and I and the whole team is big on. We understand that you are experts with what you do, and I'm not going to stand here and say I know anything about engineering. And you would use experts to help you as well. Your clients come to you because you're an expert. That's what we're here for. We're here to hold your hand, step you through the whole process, and educate you along the way. So we understand that you might not be ready now. It might be a 6-month or a 2-year process, but if we can give you the tools and the tips of how to get there, that's what we work towards.
Cool. Thank you. Thank you, Leash, for jumping on. Yeah. Thank you for everything you
I was
do.
just here for support.
Yeah, no, it's good. It's good. Yeah, if there are any other questions, you guys can kind of you can post them in the channel, or I can share them with Beck. Otherwise, you can contact Beck or Leash directly.